Hey students, looking more at Module 5. Hopefully you have worked on your checking account project. And so in addition to checking accounts, there's some other financial tools and technology out there to help handle your personal business well. So how could you make payments if you don't have a checking account? What are the online tools and mobile gadgets or apps, we would say probably, that work for banking and shopping? And with so many options, which one should I use? So there are other ways to pay if you need confirmation that a payment was made. So a check, that's one of the advantages of a check, right? It offers a confirmation that payment was made when that check clears. So money orders, cashier's checks, certified checks, a wire transfer, some of these come with some substantial cost, but these are ways that then you have record that the payment was made. So here we are trying to think of like what kind of things can we do with online banking. There's online bill pay, there's person-to-person payments, there's direct deposit, automatic transfers. You could have a payroll card, basically a debit card that your pay goes on to. So lots of different technology that we now use that gives us many of these same opportunities. Rather than maybe writing a check, maybe you have auto pay, or you can just do online bill pay from your online banking. And then these are some apps that can help with things. For instance, Mint is an online, like an app for budgeting. Gas Buddy helps you know where the cheapest gas is around. MyVenlopes, like My Envelopes, is like an envelope system for budgeting to try to help you keep track. And most banks now that offer online banking have an app also. And then we've talked about some shopping, saving kind of apps and comparison apps and extensions before. The last PowerPoint was very short, and so I've just gone into this next one about financial fraud. And we've talked some about fraud when we talked about credit. So you always want to have a plan to protect your personal financial information. You are at risk even if you don't have credit cards. And so some common scams that are out there, and what can we do to protect personal information, and how do I know, what do I do if I am a victim? So check fraud, some fake check scams, sudden riches, like, hey, if you send us this much money, then we're going to send you this $1 million that you won. Foreign business offers, maybe you've gotten these in emails or perhaps a text asking you, if you send a small amount of money, we're looking for someone in the U.S. To be our broker or to do this for us or whatever. For whatever reason, Nigeria and some other countries are very they commonly send, I don't know that they actually come from there, but they say they're coming from there. Also, work at home. There are legitimate work at home things, but there are also times when they may ask you to work at home and ask you to cash checks and then send the cash to this employer. Well, what if these checks aren't really good and then you deposited them in your bank and then it comes back on you? Overpayments, where they're claiming that, we sent you this check and it was overpaid and that you have to return the excess. Well, maybe the check they sent you isn't any good at all right? Rental scheme, where they're sending you a check that's supposed to cover shipping, and again, more of this. And then those online people who, we talked about being careful with our social media and not accepting friend requests, but like, oh, I really want to come and see you if I had travel money, or could you send me a plane ticket? Lots of people have met legitimately and, fallen in love online, and they're together and married now. But there have been other people who have been suckered, right? That someone has gotten travel money out of them, either to supposedly come visit them, or like, oh, I really miss my mom and she's sick, and, sad story, and then sending money. Right? So lots of different ways people ask for your money. Just be wise. So some check terminology so that you know what some of these things mean, and we've talked a little about this. Post date is that you write a future date on the check. So today is October 26, 2020. If I write it for October 31st because I don't want you to cash it until Saturday, for instance. The drawee, that's the financial institution that holds the funds, like what's your bank. Drawn, it's just withdrawing the money from the checking account. So when the check is withdrawn. A third-party check, it's been endorsed once and then it's being cashed or deposited by a second endorser. So remember how we talked about you would not want to have written your name on the back of the check and endorsed it with a blank endorsement, because someone else could write their name below yours and then deposit it in their account. Okay, so that's what a third-party check. A lot of banks now don't accept third-party checks. They don't want to get in the middle of that just in case it's not legit. So if you so this is like supposed to be like for help, and if you were trying to get things, but so there are different organizations and websites that will help consumers. So there are things out there to help consumers. If you look in your booklets, you're going to see law and order of bank accounts, wipe out. Let's see. I'm just trying to find exactly where some of that is. All right, so this is actually way toward the back of your book in 34 and 35. And we talk about now there are things like person-to-person payment services, like Venmo and PayPal, those kind of things. But fraud, all right, so there were more cases of identity theft than all other crimes combined. And so if you look on page 36, 37, you're going to see some like ways to thwart thieves, so ways to stop. Don't trust people, keep your pins under wraps, be sure you use a shredder. I feel like some of this is going to be on the next page. So the Federal Trade Commission, we've seen this deter, detect, defend previously when we talked about credit cards, also about bank accounts and other payment methods. So some scam prevention plans, making sure you take those internet precautions, very similar to what we talked about back in the unit about credit. Cell phone precautions, being careful with those things, our technology, our financial accounts, not just credit card accounts, but bank accounts, and then your personal information. So some of those very specific ways, again, are on page 37 and 38 that will help protect you against fraud. So as far as action steps, keeping those pins under wraps, befriending a shredder, protecting your PC, be skeptical, secure shopping, be careful where you use public Wi-Fi. Like if you're sitting at Starbucks, probably not the best time to check your bank account. Okay. and making sure that you do report things that are out there. So there are different financial service providers. So think about, like, if you have a check to cash, where could you get that check cashed? I think if you have a checking account, it's kind of obvious you take it to your bank or your credit union. But what's the difference between a bank, a credit union, a check cashing business, or like cashing a check at Walmart or Payless, those kind of places? So we have different places that will offer some of those services to us. So think about, these are all places that may be willing to cash a check for you. And what is the difference between these, and what kind of charges are you going to see from these places, right? So how is that going to end up? So if you look on page 26, you'll see information about banks, and banks are typically FDIC insured, and you can find out that for sure by going to the FDIC website. Credit unions offer the same financial services as bank. So the credit union offers savings and checking accounts, loans, online banking, ATMs. Credit unions are owned by their members, and so oftentimes credit unions are going to be cheaper as far as their fees, or if you are paying interest to them, you may be able to get a lower interest rate. So bank and credit union, very similar. Your deposits are also insured up to $250,000 at a credit union by a different agency, but they are still insured. A check cashing business, will they will charge you a fee to cash the check. Then you can load the money onto a prepaid card, and then they could, be charging you fees every time. So, but if they're keeping $4 on every $100 you cash, if it's a $500 check, they could be keeping as much as $20. So that's a danger. Again, there's some more information about that on page 27. Also, there are check cashing businesses, and then there are those payday loan check cashing places where you are post dating, and that's where you get into some major expenses, because the amount of interest that you actually pay there is crazy. So we really want to avoid that if we can. So we're not going to actually have time to have you describe your financial service business, in other words, like your bank and things. Sorry, I went backwards instead of forwards. But if you were deciding between two financial institutions, you should look at their fees and the fee conditions. For instance, how much are they going to charge if you bounce a check? Are they charging money to send you a paper statement? How much money? Do they charge you money if you go below a certain balance? Do they pay any interest on your checking account? So there's lots of things to consider. So payday loans, how that works, and if you are familiar, then you know how it works. You fill out an application and you leave a check. So for instance, if I want to borrow $500, I leave a check for $500 plus the fee, and maybe the fee is $15. So it doesn't seem like it's that much, but the check is only post dated for 2 weeks. So $15 on $500 would be 3% interest APR if I were going to borrow the money for an entire year. But if I'm only borrowing the money for a couple weeks, the annual interest rate that's the same as is much higher than a credit card or anything else. So you receive the borrowed amount, and then at the due date, they either say, okay, go ahead and deposit my post-dated check, I'm good. Or you go in and you pay cash and you get the check back, or renew the loan. And that's where people get into some issues, especially because if they renew the loan, well, now they're going to pay another $15 or $25 or whatever it is. So the customer is paying extremely high interest. And if at some point it gets deposited and they did not have the money, then they're going to get charged by the payday loan company and by their bank for that bounce check. So these are some examples. If they said, well, it's only 15% interest, so that would be $75. But if it's only for 2 weeks, there are 26 times that 2 weeks happens in 1 year. So the annual percentage rate that would be equal to, like that a bank would quote you, would be 390%. That's crazy. So then in 2 weeks, you would have to be paying back $575. So if it was for a car, or you needed part of the money for your car payment, same kind of thing here. So that APR, because this is 4 weeks, right? This is 4 weeks, but there are 52 weeks in a year. So if I figure this out for the annual percentage rate, that's 156%. So you really want to find other options besides payday loans. You might even know someone who would loan you money for less interest than this. Or try to work it out with your landlord. Hey, can you wait 2 weeks if I pay you maybe $25 late fee instead of paying them $75? Many states actually have laws against payday loans because the interest is so ridiculously high. Now, the reason they can get, like a credit card can't charge you that kind of interest. They get by with it because they don't call it an interest. They call it, like a service charge or a fee. So some of the services that your bank or your credit union is going to have, being able to make in-person or ATM teller, auto teller deposits and withdrawals, online or mobile banking. What are their hours? What's their location? Are these things convenient for you? How many branch locations do they have? Now, if you are a big online banker and ATM user, you might not care where the bank is. So it's going to depend on your lifestyle. Also, it's going to depend things like what's the minimum opening deposit? What's the required monthly balance? Do you have to keep a certain level in there? And most banks have differing accounts. They'll have a beginner checking account that maybe you don't have to have a required monthly balance other than staying above zero. What are the overdraft fees? So that's when you bounce a check, when you try to write, when you have more money coming out than you have. Those are your overdraft fees. Do they charge ATM fees? Or ATM fees if you use an out-of-network ATM? Are there penalties if you withdraw your money? Is there a monthly maintenance fee, like a service charge per month? And then is there an interest rate, for instance, if you're getting interest on your account? So lots of things you could do to decide what's best for you. So think about where you actually keep your money and why. So we will not, in term 2 of 2020, we will not be having another assignment in Unit 5, but we will still be having a test. And so I would get familiar with what's in your book, even if I didn't talk about it during the slideshows, so that you will be prepared. And again, it's always open book, so you're welcome to page through there. I'm going to post some notes from these slideshows, which will just hopefully give you something else to refer back to.